He knows that I have no problem telling someone they're wrong. We live in an era of fraud in America, not just in banking, but in government, education, religion, food, even baseball. I thought we were better than this. I really did.
Welcome back to the Big Long here as we got a lot to cover as Hurricane Ida makes its name well known throughout the Gulf Coast, impacting oil and gas. And now this will also impact the companies, for instance, like Chevron, Exxon, Murphy Oil, Occidental Petroleum, and obviously oil prices, natural gas prices, and with nearly 4.4 million barrels of refining capacity, one fourth of the country's total capacity, it was in the path of Hurricane Ida, and at least half of it has been shut down since Sunday. So it seems like the markets react to events before they happen. For instance, oil and gas prices rose last week. You had Western Texas crude jumping 11% last week. Natural gas's price rises to up 13%, and then Hurricane Ida happens, and they come back down as oil prices were down earlier, as well as natural prices fell earlier. So that's just something to keep in mind. So, as we're on the oil and gas talk, the EU also recommends that they impose travel restrictions on US visitors. Now, this is somewhat of a big thing, and the EU travel list is reviewed every 2 weeks by the members' nations. So, this could affect airline stocks, hospitality stocks, because if the reopening plays, such as airlines, and they're not seeing the demand anymore to fly because prices are so expensive due to the gas prices from Hurricane Ida happening. This will all come back to reality in time, but things could could in the short term be pretty bad for these certain sectors when it comes to the economy and the reopening of the economy. So, this is actually pretty big, as some people might not think it is, but when it comes down to the stocks and the sectors, as well as the economy, it does play an overall factor in everything. So, SEC chairman says the banning of payment for order flow is on the table. Now, this is actually very, very big when it comes to retail traders or investors. Why? Because payment to order flow payments subsidize the commission free trading that's become the norm, right? Now, the concern about this is that these payments discourage brokers from obtaining the best trades for their customers by violating the broker's duty to get the customer the best execution on a buy or sell order. And order order flow payments are actually banned in Canada and the UK for this reason. So, if this really does happen, this will be a big win for retail traders and investors who like to use Robinhood and those other brokers that have order flow payments. And that's a big talk with Robinhood. Why there was so much talk around them and the retail traders after the whole GameStop and AMC thing first happened. That was a big, big thing that resulted in a bigger conflict. So that's actually great news to hear the SEC say that it's on the table to eliminate that from the market. So another big thing that happened is supposedly a record breaking of 44 container ships are currently stuck off the coast of California. And this tops the previous pandemic record that was set in February of 40 ships. So just add 4 more ships to that. And this has come to an even longer waiting period for these cargo ships to reach the port. And that day is now about 7.6 days of that's the average wait time for these cargo ships in waiting out there to come to the port. So that's kind of crazy, and this is just getting worse and delaying the shipping and also the cost. So that's something that you gotta pay attention to too if you're ordering things or just in general when it comes to logistics and shipping container companies. These are big things when it comes to what stocks you're choosing, because if companies aren't able to get their supply in like a timely fashion manner, then why would the consumer wait so long to buy that, right? If they have to wait an average, let's say 3 months for something, I mean that's not terrible, but no one wants to wait that long, and if not longer, to receive something that they really want. So as long as the prices are increasing when it comes to shipping and ports are seeing these delays, this will be a constant variable instead of variable at this moment, as long as the Delta variant remains a huge, huge thing. All right, so today Apple comes out and says that they could start offering satellite service, and space stocks started to jump that have satellites in low Earth orbit. A couple of those stocks are Global Star, GSAT, and then Iridium Communications. Both tickers are GSAT, and then IRDM. Both of them were up today in talks around this, as also the iPhone 13 will be using a Qualcomm chip that supports low Earth orbit satellite communication. So that's also something to keep in mind, as Qualcomm semiconductors, that's a big talking point, as well as the shortage. There's so much information out there that people are seeing that this will last until half of 2022 or into 2023, and who knows if that's going to happen or if things will slowly and gradually start coming back to normal with the semiconductor shortage. Next, we have a firm stock. A firm stock comes out and announces a deal with Amazon for buy now and pay later. And this is actually crazy because during the pandemic, when I was looking at golf clubs, a lot of places use Affirm, and I think it's a very smart thing. I mean, if you spend, let's say, $500 on Amazon and you don't want to pay $500 right then and there, why not do 4 payments of $100 if that's something that suits you, right? I mean, it's a consumer thing, right? If you think paying $500 and $400 payments is better than one lump sum payment, then so be it. But the fact that they were up 42% over this, that is wild. So, tech company growing in the bill payments platform, that's something that really caught my eyes, as well as I brought this up earlier today. Zoom video earnings beat expectations, but the stock falls. Now, this is because, like I said earlier, it seems like the markets always beat what is happening. And what I mean by that is Zoom took off in the pandemic because everyone was at home, everyone was working from home. Now, as the economy in the US is starting to reopen with everyone getting vaccines and people are going back to work, will Zoom really be as big as it was in the pandemic? Now, according to their earnings, yes. But according to the investors and traders, no. They think that these earnings were too good and they're going to come back down once everyone fully returns back to office. So this is definitely something that I'm going to keep an eye out. Why? Because I think Zoom's a great company. Why? Because I know a lot of small businesses that like Zoom and utilize Zoom. Specifically with my job, we don't utilize Zoom, but some of our clients do. And I mean, it's a good software. So definitely looking at this long term, and especially that 10% drop in after hours right now. We'll take a look at it. Now it's time to get into the market. So S&P and Nasdaq pushed new records as futures are up, looking at plus 0.54% for the S&P, and Nasdaq up about 1.16%, and the Dow down about 0.04% in the after hours with some light volume. So today's stocks in the news: Apple, Zoom, Catalent, Affirm, Amazon, PayPal. So Apple we talked about, Zoom we talked about, Catalent don't know, Affirm talked about, Amazon talked about, PayPal didn't, but they did come out saying that they're going to explore stock trading. So this is actually very interesting, as we all know what PayPal is. It's a payment provider. So that's very interesting, something I'm going to keep my eyes on for the long term. So today, in terms of sectors, real estate was the top performer at 0.83%, as financials were the bottom sectors, declining 1.5%. And we could see the total stock movers today, the big winners: Renovex, Global Star, Affirm, Catapult, and Support. The biggest losers: Nexus, Astra, Neurometrics, and Fat Brands, as well as the highest volumes were GSAT, BBIG, AMC, Any, and Apple. So now, something I do want to get into is SPRT, BBIG, and AMC. As we look at Ortex right here, now this is their Twitter. Now they announced that AMC short interest update was about 17.42% of the free float, and BBIG's today increased 2.18% today, with 10 times more shares borrowed than returned, and the cost to borrow average of 220%. Now that is big numbers. So SPRT, on the other hand, now the short interest is 72.75% of the free float, while the utilization is 95.62%. So these are big short interest numbers and data, and this is awesome that Ortex tweet this. So I mentioned SPRT, BBIG, and AMC. I'm always looking at AMC for that reason, but just to give you some information on where I get my source from, Ortex Twitter, they tweet pretty much every day updated short interest data. So they're great to get this type of info from, and you could get a free trial. So some of those high shorted stocks, for instance, you got Workhorse up there, you have SPRT up there, you got Blink Charging, you have CRCT that I brought up, you have Lordstown Motors that I talked about, as well as Smile Direct Club. So a lot of companies that have a high short interest, and only a few of them are getting targeted. So This is why you can't just buy into a stock in hopes a short squeeze happens, because it might not happen, because the amount of buyers need to put pressure on the short sellers to be able to close out their positions to then push the stock price higher. So if the buyers aren't putting pressures on the sellers, then the short squeeze is not going to happen. Could you possibly get a gamma squeeze? Yes, that is definitely in play as the option market, depending on the calls being traded on that day, could cause a gamma squeeze depending on if the market makers already hedge for that specific range, or actually options. So tomorrow we don't really have that much economic data coming out. I'm really paying attention to the Chicago PMI as well as the CB consumer confidence. Consumer confidence shows the optimism of consumers in the economy, so that's a number to look out for, as it's forecasted 124. And then the Chicago PMI, that's the manufacturing around the Chicago area. And last time this came out, it was around 73.4, and it's forecasted for 68. So if that number comes in higher than that, and typically a number higher than 50 is projecting an expansion in the manufacturing space, as a number below 50 is signaling a contraction phase in that. So that's what I'm looking at, as Wednesday will be a bigger economic data day. And then for earnings, we talked about Zoom today. Tomorrow, not really looking at any earnings tomorrow. And then Wednesday after close, Chewy, ChargePoint, Five Below, Asana, have my eyes on those. Thursday, really just DocuSign, as well as some of the retail companies like Tilly's, Duluth. What else? That's really it. I mean, American Eagle, but that's really just to see if consumers are spending money on clothes, right? But you have to take it with a grain of salt, because this was Q2 numbers, as we're already in Q3 going into the last month of Q3. So Q3 numbers will really give that retail numbers more clarity and more pretty much information on what is going on with consumer spending in terms of that. So that's what I got my eyes on. Let's get into some charts. Index, as it hit a high of 4537.36 today, and we opened up at yesterday's high, pretty much a little bit higher than it, but it was right around it. So looking at the weekly chart, you can see it's hugging that 5-day moving average pretty tightly, as well as the trade line below it. And then as we move to the daily chart, we see that today we had a little breakout above yesterday's close and also yesterday's high, indicating that this is still continuing upwards. So one thing I want to point out is on the hour chart. You could see that right around here, this was August 19th. And what I've been saying in my videos is around the past 4 or 5 months, around the 17th, 18th, 19th, there has been a dip. And then each dip has been bought. So this hourly chart right here, where it's August 19th, is showing this drop off right here. And then you could see, obviously, the next day it pushes higher and closes high, recapturing the 50-day moving average as well. So you could see that on the hour chart, 200-day moving average held as support, and it signaled pretty much a false breakthrough, right? So when you're looking at the 15-minute chart, you see a V-shaped recovery, and if you think that this is going to end anytime soon, I mean, It's a lot easier to see a bubble than it is to call the bubble burst. So right now, I don't see anything that is alarming in terms of a drop off or a dip yet, other than the weekly RSI is slightly overextended as we start this week off, reaching new highs as well. So, looking at the Nasdaq now, looks like the S&P, right? But a little difference in the dips. So, looking at the weekly chart, RSI again overextended, MACD showing bullish signals, but the MACD is very tight to crossing over. That is something I'm going to keep looking at as you see the trade line holds as support until a dip happens. The 20-day moving average on the weekly has held as support. And then looking at the daily chart, you could see that on August 19th, right here and 18th, that the 50-day moving average held as support. And then looking at the hour chart, you could see that we had that dip, right? And the 50-day moving average crossed the 20-day, signaling a bearish momentum change. And then since that crossover, it lasted a day, and then the momentum continued upwards, and we keep on reaching all-time highs. So this is definitely something to be on the lookout for, as the weekly chart is definitely very overextended as we're going into a new trading week and just wrapped up the first day of the new trading week, reaching new highs. Be careful and be wary about the technicals, because on the daily we have the MACD signaling a breakout sign, which to me right now I'm bullish on the market. No ands, if, or buts. There's 3 FOMC meetings left in 2021. Next one is coming in September. That is going to probably be the next time the markets react and have a slight pullback. Could it be around the 19th or the 17th to the 19th, like I previously mentioned? Not sure, but that is something that I'm keeping my eyes out, as we see market open has been the big bullish sign. As you could look at the 1 hour chart, so far every open we've had a big push upwards and then just consolidated above that hour close, right? And we could see that it's support because the pullback touches around that previous close, which indicates that there is somewhat support at that level. And then even here, we reach again highs as we consolidate higher and higher and pushed higher on the 1 hourly chart into close. So I don't see anything that is going to stop us from reaching all-time highs, but I am cautious if we do push all-time highs way too fast and way too much. So that is something that I'm definitely keeping a close eye out on as we just continue to make all new all-time highs almost every other day. All right, so first stock up is AMC. So today AMC was up 6%, pushing higher in after hours right now. As we look at the weekly chart, we see we finally broke out of that bull pennant. So that's a good sign from the weekly chart, but then as we narrow it down from the daily, you see we're actually flirting with that resistance, as we didn't fully break out of it on the daily chart. But what we did do is recapture the 50-day moving average, which in my stance and a lot of traders and investors stance is a good sign for the short term. Because if we have the 20, the 5, and the 9-day crossover, the 50-day, then that is going to signal a very bullish move upwards. As you could see on the daily chart, since July 20th is when the 50-day moving average crossed all 3 of them, and we've been trading below that for quite some time now. So that is something that I'm keeping my eyes out on, as the hourly chart, we have a little cup and handle forming, and then we started to consolidate, and we're consolidating at this level in the aftermarket hours right now. So we haven't seen a breakout on the hourly chart above that resistance line yet. But like I pointed out in a lot of my videos, you have to work long term to short term. So from an intraday perspective, the hourly chart hasn't signaled that move, but like I brought up on the daily chart, the 5, the 9, and the 20 have crossed over the 50-day moving average, signaling that short-term bullish momentum. So if that continues going into tomorrow, we could definitely see a higher push up to the higher 40s and hopefully back over that $50 range, like I said, to get those big players, aka the whales, back into this to drive this stock up back to that high of 72.62. So then looking at the 15-minute chart, we did break over that resistance line, but then we came back down, and that is showing some strong resistance at that levels. As you could see, we're consolidating right below it, trying to push upwards above it in the aftermarket hours. On the 5-minute, we are above it, but you gotta take the 5-minute. I mean, this all comes down to intraday trading. So that's just showing the momentum and signaling any trends. So this is something that I'm going to keep my eyes out on going into tomorrow and the rest of the week. All right, next on the list is Apple. So Apple hit an all-time high of 153.49 today. As we're looking at the weekly chart, you see that we are pushing higher, but then as you could tell, the volume wasn't necessarily that high today as opposed to some other days. But because of that news coming out of Apple iPhones possibly utilizing satellite, that is that that's a variable. I mean, that's really good news coming out and saying that. But Apple did comment on that, and people or investors, aka traders, did not care about the comment. They were trading the news, right? Um, so, as you could tell, straight from market open on the 15-minute chart, we took off, and since that, it was up and running once we recaptured the $150 mark. It was up and running the rest of the day, and it was consolidating. Once it hit pretty much that 150 mark, right, and then it reached all-time highs, it was just consolidating up there, which is signaling a strong move. But then when you look at the short-term and long-term trends, the weekly is showing a bullish sentiment as the RSI is slightly overbought. So that is something to be cautious about as that pushes higher. And as the daily chart is still signaling bearish momentum with the RSI positive. So since July 21st, the MACD has actually been downtrending, and the stock has just been consolidating flat. As you could look at the volume oscillator and RSI, it's been consolidating around this zone. And then every time it breaks out, it comes right back down. So this is going to see a test if it could get above that 74% level and push higher. Then that is something that will catch my eye. But Apple, good long-term investment. I'm in Apple long-term. This isn't financial advice, but just giving you my own opinion. So let's go on to the next one. All right, so last one is Zoom. So like I said, Zoom came out with earnings today after market, and they plummeted. They closed at 347, and they are at 305 right now. So about a $42 drop, which is crazy. And this is just signaling that Q2 earnings were way too good with this reopening of the economy. So this is why I explained that Q3's earnings are going to be the true reopening earnings or the stay at home plays. And that's going to really show the true, I personally think, quarterly earnings. So if we're looking at the weekly chart, we could see that it's trading below the 50-day moving average, and the MACD signaled a bearish outbreak, as well as the RSI is lower, and the volume oscillator was pushing a little higher at the end of the day. But as we break down to the daily, we could see that Zoom was actually pushing higher today on earnings because they were expecting to be a beat on earnings. But like I said, better than expected earnings. Investors took it as too good to be true in this environment, and that is why it sold off after earnings. So this is something that I would look at to get into long term. But looking at that drop to 305, right? If we're looking at the chart now, 305 is, well, let's look at the weekly chart. So they haven't seen the low threes since pretty much May 10th. And since they saw that low, high 290s, low 300s, right? They just been uptrending since, crossing over that 50-day moving average, but that was a false breakthrough. As you could see, the volume oscillator and the RSI were pushing down at that red candle on the weekly day chart, indicating that resistance is at that level because of back here where it sold off on March 1st. So I personally wouldn't get into Zoom yet. It could push lower, but then again, in this market tomorrow, it could be right back at close. So that is something that I will keep my eyes out for my long-term portfolio, but nothing I am extremely worried about at this point in time. So that wraps it up for this market recap today. Hope you enjoyed it. Hope you learned something. Please hit that like button and have a great rest of your night.